Thank you, Mark, and a big hello from London. The technical patterns I've seen this past week across markets have some commonality, but there are also disparate ones that make me wonder why and what exactly is going on. I'll start with the currencies. We had weekly key reversals down in US dollar Canadian dollar, US dollar Norwegian kroner, and US dollar against the South African rand. So far, nothing unusual. We've had a nice follow-on lower in US dollar Canadian dollar, a limited move lower on US dollar Norwegian kroner and US dollar South African rand. We also had weekly key reversals down in sterling rand and US dollar Brazilian real, and things now are not necessarily following through lower. Sterling rand had a move lower to start on Monday, but pulled back up later on in the session, and we're now close to where we finished last Friday. Meanwhile, US dollar Brazilian real is having some real issues in trying to follow through lower, as it hasn't managed it, and indeed has had a move back up where most of the moving averages sit, between 521.90 and 523.90. Yet even this pullback up is fraught, as prices made a large indecisive spinning top pattern yesterday, with a really long tongue on top that probed higher and was seemingly batted down by the moving averages. The market today has based itself on the middle time support, currently at 514.62, of the late July to late September bearish pitchfork, a shallowly bearish pitchfork that seems to hold the most promise for this market right now. I'm just mindful of the flatlining long moving average below, currently at 509.75. I'd next like to talk about Euro Sterling. This had a weekly key reversal up last week, if only just, and at first it looked like it was going to have difficulties in following on higher, as Monday had a combined daily key reversal down and bearish engulfing pattern. However, the market has been propped up this week on a closing basis by the rising short-medium moving average, currently at 87.09, and this has generated a new high today, not seen since mid-October. Additionally, the core pattern that is pushing the market higher is still there, despite being broken and breached both above and below. It is the April to early August bullish Andrews pitchfork, and this pitchfork has repaired itself, and we're now seeing prices move up and away from the lower time, currently at 86.68. Finally, in the currencies, we have a strange Japanese yen based trio. We had weekly key reversals down in Euro yen and sterling yen, neither of which have followed through lower. We did not have such a pattern in US dollar Japanese yen, but perversely we had a weekly key reversal up in Aussie dollar against the Japanese yen. What is interesting here is that we've also not had any follow on higher to this pair. As I said, it's a strange trio. In the commodities, we had a weekly key reversal up in New York cotton futures, which has tried to move higher, but unfortunately has a load of congestion above, in between 87.02 to 89.97 area. Then I come to the metals, and we had a weekly key reversal higher in spot gold, which, after some hesitation on Monday, has seen an excellent move higher yesterday, up and out of the June to August bearish shift pitchfork, which has run the market since the summer, and up to test the declining medium moving average overhead, currently at 17.15. Meanwhile, in LME 3-month copper, we have seen a weekly key reversal up last week that broke up and out of the late August based bear channel last Friday, closing above the medium moving average, currently at 77.39. However, there has been no follow-on higher, nor, to be honest, a pullback either. Since then, we've just sat a little under last Friday's high and the September high at 81.53. We also had a weekly key reversal up in LME 3-month nickel. However, this is a special situation, as the market is currently working its way along a July to date based ascending triangle, and it is cautiously approaching the flat upper tine, which is coincidental with the August 2011 high at 25.195. The caution is justified, as just above this high and trend line is the flatlining long moving average, currently 25.480. I go into greater depth on spot gold and LME 3-month copper in my daily commentaries, and on LME 3-month nickel in my weekly commentary published yesterday. The final grouping is stocks, mainly the Chinese stock indexes. We had weekly key reversals up in the Chinese CSI 300 index, the CHINEXT Composite index, and the Shanghai Composite index. All three looked as if they might follow on higher this past Monday, but all have faltered, and are looking somewhat as if the weekly key reversals up may have failed right now. The final one is for the TikTok generation out there. We had a weekly key reversal down in the US stock AMC last week. Monday saw the start of a nice follow through lower, but yesterday prices pulled back up, though not as far as Friday's close. As a quick addendum, in Bitcoin, we are already set up for a monthly key reversal down. It will matter if we close either above or below 19,425 at the end of this month. I'm always happy to answer any direct questions of anyone who is interested. And with that, I'll finish this section from London and hope that you found these comments useful.